it was literally breaking my heart. I mean, nowhere to hide. He's literally sent more trades from max gain to max loss in the last 20 minutes of the market that I can count just by his tweets. And I had to learn, sometimes not clicking is the best decision. I don't know what's more emotional than starving and not knowing if you're going to have a roof next week. Life will always give you excuses not to come back.
Hi, I'm Steve Ruffley, and this is the Trading Battle, where we bring you top traders, mentors, and industry experts from around the world to break down real market insights. Joining us today is someone who bridges the world of institution portfolio management and the fast-growing funded trader space. He's the CEO of Paragon Elite Trading and Paragon Funded Trader. Now, he's got 25 years of experience managing capital across futures, FX, equities, and he's seen the markets from every angle. From the institutional desks to trading coaching. Within the Seek strategy, it builds a professional risk-first process designed for long-term consistency. I love reading these intros. Anyway, Matt, welcome to the Trading Battle. How you doing?
Thank you, Steve. I'm well. How are you doing, buddy?
Yeah, I can't complain, mate. Can't complain. Okay, I'll start with the same question for everybody. How did you get involved in finance and trading? What's your story?
All right. So I probably had an unorthodox channel. Going into trading, I used to run, out of college, I became a buy-side analyst for an all-cap growth fund and managed that for about 10 years. But we went through the Great Recession, and, all the other portfolio managers that are hearing me right now know what I'm saying when I say, aside from being one of the most frustrating times in money management, when you're a buy and hold strategy during that time, I mean, there was just nowhere to hide. All boats were sinking. And, most of my clients were retirees. So it was literally breaking my heart. I mean, nowhere to hide. Didn't matter if you were in bonds, municipal bonds, government bonds. Everything had higher double the correlations they usually do with each other. And everything was sinking. So, following that experience in early 2009, I just decided there had to be a better way. I actually thought about, incorporating some kind of safety net, trading derivatives around the positions we had in our, buy and hold all cap growth strategy. But it was just going to be a compliance nightmare. So I decided to do step away from the fundamental valuation-driven investment style market participation and lean towards more technical and sentiment-driven trading. So when I say investing, I mean valuation work and long-term outlook. But trading, I'm talking about technical and quant and sentiment. That's what drove me into trading. I wanted to make money going both ways. I never wanted to go through that again. See our clients' accounts just get demolished by 40-50% in 1 year.
Yeah, I mean, it's tough. I mean, do you see any kind of correlations with markets now? I mean, we've seen these huge drops or spikes and drops in gold and silver and Bitcoin. Touchy subject. That's getting pretty hard today as well.
This is I've seen this movie before. When the market gets frothy in terms of valuations, I'm not sure I was trying to find the chart because I usually get an S&P chart and then I overlay on top of it forward 12 months earnings, EPS, PE, I should say. And I'm fairly sure that it's hitting a peak right now. Anytime you see the S&P and the major indices, up 2%, down 2%, up 2%, down, any little thing spooks them. It's just kind of a signal that buyers they don't have a lot of conviction, and I wouldn't either at these valuations. I think we're due for a little bit of a retracement, and so that's when things get really volatile at the top. And then when you get that first crack, as you know, fear is a much stronger emotion than greed. And people see that crack and it'll send us down a good 10%, I think.
Yeah, I mean, easily. I mean, I would say that with the fear, markets do move quicker and more aggressively, but some of the moves you see up have been quite spectacular. I mean, especially the rally in silver, and we could,
Yeah.
anyone can
Right?
make any case for that they want, but
I No, I was looking at that the other day with one of my traders,
mm,
and you know what is it? The last year that it's just gone on this parabolic rise,
yep,
and I was asking him, what is it about silver that we didn't know before a year ago that all of a sudden we know now? I mean, it just seems crazy that it's done that kind of a growth curve, but it is what it is, and I don't know why silver is the one, but gold as well is hitting new record highs, but I can't believe silver is on that exponential curve.
yeah. I mean, it's when you've traded for a long time, as we both have. When you see these market conditions, it always doesn't surprise you, but then also does. Some of the moves that we've seen in the quick retracements, they're utterly brutal. When you're doing your strategies, this is something I've asked other traders because this is something I've seen change over the years. When you say sentiment and news, it's really interesting in the US. And again, I don't want to get political, obviously,
Yeah.
but
Oh, I don't.
when you when you have tweeting things, saying things, and they move the markets this much. And then you have, these shutdowns, the Bureau of Labor Statistics stopping reporting data. It's very difficult to kind of know how that sentiment, what's true and what's false. The market seems to move, on literally on a tweet. I mean, how do you prepare yourself for that? And how do you prepare your traders for that? The world, tell us.
Steve, I never talk politics at all. And it's so ironic that the one thing you bring up about our president is the one thing I cannot stand. He tweets. Why? Why do we have a tweets? I remember the first time he did that, I was thinking, uh, isn't that just for 12-year-old girls? I don't know why you're tweeting. And he'll literally tweet anything that comes across his mind. And I don't know if you saw it about 3-4 months ago when he tweeted, um, just off the cuff, just some random, I think it had to do with China, some tariff discussion or trade. I try not to listen to him. And I don't like that he tweets because he destroys my trades. I wish he'd wait until the close, after the close on a, expiration Friday, let me go ahead and take the maximum gain. He's literally sent more trades from max gain to max loss in the last 20 minutes of the market that I can count just by his tweets. But yeah, that's one thing. I obviously as traders we don't like not or having variables that drive price action that we can't really see coming, and it's definitely one of those things. And so uh yeah, I'm not a big fan of the fact that he does that, but um but we do like volatility. So on the flip side, that's kind of our bread and butter is that volatility. But it's just, yeah, not knowing when it's coming is the problem, because I can't sit here and watch a chart all day, even though sometimes I do.
Yeah, I mean, it's certainly interesting market conditions for sure. I mean, and that's obviously where your kind of coaching must come in. So when you're coaching traders these markets, I mean, just give us a breakdown of how your methodology, how you help people. I mean, I've mentored people myself. I'm a day trader, but yeah, it's certainly for me, it's become harder and harder if you haven't experienced many different market conditions and these new ones to kind of, I mean, some ways maybe it's better. I don't know. Maybe the newer traders they have less baggage, less expectation. They're just trading what they see. I don't know. What's your experience?
There's something to be said for that. There are a lot of benefits that come along packaged with a blank slate. Someone that's never traded before. There's no bad habits. Um, One of the hardest things, and I don't know if you've coached traders before, but one of the hardest things for me is when I get a trader that already thinks he knows it all. There's not much you can do except be patient and let them see through their journaling that maybe they don't. and maybe they can learn a few more things, and maybe I can learn from them. But what I like to emphasize is that a static curriculum is never going to help long term. Like you said, we're getting into a new market dynamic now where there's more volatility. You got to be watching a little bit more. I've lowered my time frame that I trade on. So, with gold and silver, I'm trading on 5 minute charts, 15 at the max, just because you get these big swings with heavy volatility or volume. But I've always been one of those FOMO traders that trades a shorter time frame. But I like to bring in traders, and honestly, from the start, obviously we've built a curriculum that starts assuming someone knows nothing about, and we have 3 markets that we coach in: futures, options, and forex. And I always encourage people to go forex first. Seems to be the easiest, but what we like to do first off is have them take a personality exam or assessment. We do the Myers-Briggs assessment, and it's really for them, for the trader. The more they can understand about their own psychology, the sooner the better. I did that, and I realized I've never believed in those tests. I've never believed in what's your sign, or what color are you, what's your love life. I'm a Libra, and I always read those horoscopes, and it's 50-50. It's vague enough that it could be true, but I tell you, Myers-Briggs nailed me to a T, and I spent a whole weekend one time studying it, and it definitely described me. But it'll help a trader understand who they are and how their personality traits could be pitfalls or advantages going into trading. And it was definitely true with me. Psychology is, people don't understand until they actually, I'm sure until you're trading, you really don't understand how strong emotions get, and psychology matters. And sometimes it can be the most important thing is controlling it and not going full tilt. And because I've revenge traded before, I've over traded. I've made all the mistakes.
Yep. You have to.
Yeah.
That's how you know your limits. You have to.
Yeah.
Sorry, there's, we all made mistakes in trading, and we're all guilty of it. But you can't say you're a trader who's made it unless you've made every mistake, I think.
Yeah, unfortunately. I try to tell all my traders all the mistakes I've ever made,
Yeah.
thinking I'll form a bridge for them to not fall in that hole. But yeah, it sometimes, I think it's a rite of passage that you definitely have to fall in some holes.
Losing money and losing your own money is the best teacher. I don't care who you are. It hits everybody. In different ways. You're exactly right, but it does hit everybody. Losing money, it doesn't matter how rich you are, it hurts.
Yeah. I remember when I got my my CFA charter back in 2004, for some crazy reason, because they teach options on that exam in one of the levels. I think all the levels, but they get gradually harder. And when I passed level 3, for some crazy reason, I thought, oh, I'm officially smart now. And I threw a bunch of money in an options trading account, and I think it was all gone within 3 weeks. I think now about what I did back then, and I had a long way to go. Options are probably one of the most difficult markets to trade. There's so many moving parts.
Yeah, never touched them.
And unfortunately,
my pay grade.
What's that?
Way above my pay grade, I think.
Well, you could, if you don't know what you're doing, like I said, you can lose all your money very quickly.
When you talk about short-term trading, you talked about the 5 and 50-minute charts. How long will you actually hold trades for? Are you a pure out-and-out scalper, or are you trying to position for, the intraday? Because I find a lot of people that come to me, they want to be a day trader, they want to make day trading returns,
Sure.
They have one loss, and then they want to be a swing trader. They want to hold it. Yeah.
Well, and that depends on what asset I'm trading. Obviously, if I'm trading prop money, you have to abide by their rules, right? If you want to trade, if you want to build your company off their money, it's just the cost of doing business. You got to abide by the drawdown rules. So if I'm trading gold, silver, they make unless your position is tiny, they make money so fast and lose money so fast that you kind of have to be a scalper or just have a tiny position and let it ride. But futures the same thing. I'm a minis trader. I don't like the micros very much. But if you're going to go longer term, micros are great. But lately, there's just so much volatility. I won't even touch the NQs anymore. I don't know if you've seen the level 2 quotes in the morning when the market opens, but it's I don't know how you trade the NQ minis and hold on because it's like a trampoline. But then Forex, I will go longer term. But I've always been somewhat of a shorter term trader. I get FOMO partly because I'm in front of my computer all day. So I like catching the micro trends during the day. I think trading a daily chart would be boring, but that's just because I have time to trade more. But I've learned that it really is all about discipline. I remember when I first started trading, I felt like I had to be clicking.
You created the Paragon Funded Trader. I mean, that's kind of a bit of a buzz industry, I guess, this whole prop trading. Again, something I don't have any experience on. What led you to that? What you kind of, as you say, you have to abide by slightly different rules or their rules, as you say. So how does that work?
So, So up until, when we started Paragon Funded Trader, when I would teach and coach traders, I would do due diligence on other prop firms that were out there currently. And when they were ready to be funded, I would kind of route them toward the ones I felt comfortable with, like your FTMOs and Top Steps and your bellwethers of the industry. You got to be careful and steer clear of the ones that are just in it for the cash grab. They've seen the failure rates and that's what they're counting on. But over time, I wanted to be able to fund traders ourselves. And so we actually partnered up with a firm called Prop Account. It's FPFX is their parent company, but so they have all the mechanism in place, the technology in place. So it's a perfect fit for us. They've won tons of awards, execution awards, technology awards, payout awards. They're 100% track record with payouts over the last 4 or 5 years. Which I've done a lot of research. And obviously, that's one of the spots of contention and frustration among prop traders is when they get denied payouts. And so ambiguous rules, things like that. I kind of know what to look for now. I mean, like I said, ever since I was a portfolio manager running that fund, I mean, studying business models is kind of my bread and butter. So I can get into a company and understand how they make money but we wanted to kind of take control of that so we can control the quality of the prop trading experience for the people we coach and combine a coaching element with prop trading. Because I don't know about you, but I don't like where the pass fail rates are right now in the industry.
It's difficult, isn't it? Yeah, because again, I think when we said about the personality and things like that, each trader will have their own risk tolerance and they will have their own style. And certain styles of trading, just won't be applicable to prop trading. You cannot make money that way. You'd end up over trading, or the inevitable holding a trade one way or the other till you're stopped out, or you make this mythical amount of money. So, but the stats for trading, especially retail traders, hasn't really changed for me. And then also the stats on traders when I worked on the electronic floors, back in the day, even the stats for grads they'd bring through and trade, the vast majority of them probably are a similar kind of fail rate to retail traders. So I mean, it's only ever a tinier percent of traders that make it and make it long term. Anyone can have a good week, month, year, but 10, 20 years later, the amount of people in the game, as are tiny.
And I think one of the main problems that people have, the people I work with have, is they enter an assessment, and the first thing on their mind is that profit target. They shouldn't be worrying about that. What they should be worried about is the drawdown and just surviving the assessment, not hurrying up and hitting that profit target, but rather not hitting the drawdown target. Because people that are going through these assessments, I think a lot of them have great strategies. If they'll just, manipulate it a little bit. I mean, I don't like the strategies that will take 3% on any one trade downside. I mean, we don't want to do that, but, so tighten that up. But, most of them have decent strategies. They know what they're looking for, but they're trying to hit that profit target so quickly that they're taking big risks, and, they're not, it's like their trading plan goes out the window as soon as they start the assessment. Cause I got to hit that target profit, and then I can start making money. And then another thing I see a lot of is, when someone's actually live in if they pass the assessment, they're in the payout phase, but they're saying things when in our coaching sessions, like, I've got to make some money. I've got my mortgage due next week. That's just, you don't need that kind of pressure on you when you're trading. If you're depending on eating and living based on your next payout, it just causes you to, like we said, the less emotion you can bring into trading, the better. And I don't know what's more emotional than starving and not knowing if you're going to have a roof next week.
Yeah, but it's surprisingly interesting when you don't need the money, how easy trading can become. But, that only lasts for a little bit as well. It's just when you don't have the pressures, as you say, the day-to-day bills, you can wait. You can be more selective and patient. There's another question I ask other people, because this is what I found, really hard to get through to traders. How do you allow traders to scale up? Okay, so, at some point when you're a trader, you've got to have some size on if you want to make decent money. That's just the way it is, especially if you're a short-term trader. Yeah. So how do you scale people up, and traders up? What's your kind of process behind that?
Yeah, I mean, we accept, we let traders have up to 5 accounts, and we do accounts up to 500,000. We don't scale accounts. We didn't want to do that because I want people pulling payouts, consistently. I don't want them leaving in their profits, and not taking payouts and risking, making a bad move or getting emotional one day and blowing their account before they took anything out. So that's one reason we don't scale accounts. So we do encourage, monthly profit or biweekly profit payouts, because just keeping it in, we're not going to add any more to your account. If you got a $500,000 account, just take it. Yep. Take your profits when you can, but multiple accounts and a trade copier or something like that is how I encourage people to scale up. And then a few $500,000 accounts, and you don't really need to have a very big day to have a great day.
Exactly right. And that is the draw of this kind of side of the industry, isn't it? Having traded, kind of my own accounts and scaling up size, it is a different feeling. But I'm interested in this kind of educational side, because, I've written books and all that kind of stuff. And the one thing I point out in my book is there's so much information out there. Why isn't, when we said about, the percentage of traders that make it, why aren't traders getting better? Why isn't that, with all the information out there and all the effort we put in and the experience we give, why is that number not increasing?
Well, the problem with a book, I was going to write a book too, but the problem with a book is it's static. It's a snapshot in time. You may have written everything right according to that date, that snapshot in time, but markets change, and books that were written 10 years ago, I don't know how much they apply to a president that tweets. So plus, it seems like with advances in technology and with AI, you've got money moving in and out of the market a lot faster than it used to. So volume trends are changing. I'm noticing. I used to notice a spike in the gold dollar pair every morning at 6 o'clock my time. That's when volume would spike, because that market would open. And now it's kind of been, it's starting a lot earlier and it's kind of normalized. So that edge is gone.
Yep.
But yeah, I was going to write a book, and that's one thing, with the people I'm coaching, we're constantly updating our curriculum because market dynamics change. For example, right now, usually in the summer months with Forex, it gets really choppy, because there's less volume, right? So trends are less, you don't know if they're legitimate or not with less volume. You get a lot of chop, you get a lot of large wicks and small bodies and things like that. So newer traders have a hard time in the summer. And when you get a frothy market like this, where I think a lot of investors don't know if we're overvalued or undervalued, they still have that little greed where they don't want to miss out on that exhaustion, bull rally, but they also know a crack is coming too. So that's why we have these swings. And economic data, it really isn't that great, but it's not bad either. So but valuations are pretty high. The market will always be changing, and my plan for my trading plan is to always be evolving. I consider myself the eternal academic. I don't think I'm ever going to reach a point where I'm going to say to myself, "You're there, you've arrived." That I don't think that happens.
No, I don't think it does either. I don't think it does. And you're so right. It's interesting what you said before about, seeing the spikes in volatility and that being an edge. I've interviewed some other people recently when they've talked about AI. No, I'm an old school trader, so I don't use AI or anything like that. I mean, what's your experience? I mean, when you say you see things on a chart as a trader, that used to be your edge, but everyone's seeing everything now, or AI is somehow magically seeing it and telling you. I mean, how do you incorporate that, or do you not? I don't know. I'm just interested.
Well, that's what I mean. Up until about 6 months ago, that was kind of a little competitive edge, because I look at charts when there's a pair or an asset I like to trade. I have my favorites, and I've been watching it for years. So you kind of get a sense of the personality of that chart, right?
Sure.
And one thing I love to do is try to find correlations with anything I can. Price action that correlates with anything. And one time I just, I backed out on the time frame and looked at a longer time frame, the hourly. And I scrolled the mouse back and looked at like 5 days worth of data, and I looked at the volume, and it would be so small. And then right at 6 o'clock, it would just spike, and it would start a trend. 3 out of 5 of the business days, that would start the trend for the day. And it would go for a couple hours, and then it might retrace or it might keep going. But if you could get in on that initial surge, whichever way it went, you make a lot of money. You can pass an assessment in one day. But now, like you said, you've got everything seeing everything. And I don't know if I'll ever trust an AI to trade for me or anything to trade for me. I don't use EAs at all either. I have to have and maybe I'm just a control freak. Who knows? I have to have my hand in it, at least. But yeah, the markets are going to evolve more and more, and I don't know how I don't necessarily know how they're going to, but I know they're going to change more and more and more, and we've just got to be able to change with them and find. As long as you can read a chart, I think you'll be okay, and as long as you're disciplined, you have good risk management, capital preservation above all else, you'll figure out a way, and you adjust your strategies to accommodate the current market conditions. But yeah, just trying to stay set in your ways. And I used to love trading high and low basing patterns. For some reason, my eyes would see those right away, and those used to be great for me. But lately, with all the volatility, I don't I don't see those much. We've got a tight high base or a low tight base. I've not seen one of those for a while. If anything, it's some kind of triangle or a wedge or retracement, or there's no calm consolidation patterns anymore.
Yeah, I mean, there doesn't seem to be a lot of calmness in the markets, full stop, does there? But as you say, for short-term traders, the volatility is good. But that's a core message that's been throughout, a number of chats I've had with traders is that risk management is key. So I mean, I just want to go back to this kind of when you're teaching traders. So we talked about the scaling up and the different accounts and that kind of stuff. Something else that I've kind of experienced is you have the motivation to make money, but not a lot of people then harness the momentum to keep going. People seem to run out of steam, be it, expectations are met. Have you got a process in place to keep a trader in the game for as long as they need to be? I think that's what a lot of traders are missing at the minute.
So a couple things I'll say about that. We've done a few things lately, because one thing I've noticed when you get a trader that's green, one thing that trader needs above all else is time. Time to be able. That's why our Paragon Elite's business model is the way it is. There's no membership fee. I think we're the only firm that coaches that doesn't charge a membership fee. We're month to month, and it's pretty low monthly fee. And then we even started lately with a lower monthly fee, and you get all the curriculum, but you don't get the coaching. It's for people that are still in school, or they're really busy with a new job, or they just had a baby, things like that. We want to keep them in the game because I in my experience, when people say, I got to take a break for a while, man, life will just kick in, and life will always give you excuses not to come back. I mean, it'll make you busy. So we do have a self-paced program where they can pay just for the curriculum and access to the forum and the trading forum and the live trading sessions and things like that. But they won't get that one-on-one coaching session every week like the normal rate. And then another thing we've done, so when I say give new traders time, I mean from the time they start being mentored by us to the time they start making money off trading. The more time we can give them to do that, the better. Because, I've just kind of run the numbers, and I know another firm in town that charges, $7,000 up front and then $299 a month. Man, their discretionary funds are gone pretty soon. And now they're in a rush to make money because they're running out of money, discretionary money. So I want to give them as much time as possible to really learn properly how to trade. So we've got financing options where they can spread it out over, 5 years. We discount a yearly rate, and then they can spread that out over 4 years. I mean, it takes it. Our normal rate is like $469 a month, but then with that option, we have a capital partner that does that too, and we can lower that to $59 a month. So imagine how much longer they can train and be coached before it becomes money becomes an issue. And I think that's always going to be beneficial. It's when the trader feels pressure that, gosh, I got to make money in the next 3 months or I quit. I got to quit. It's never a good situation, because I mean, what do you think the odds are? I think the odds are on quitting.
Yeah, I mean, it's that real kind of balance. I find it a lot when you get younger traders, because maybe it's beneficial that they're living at home. They have less, expenses. When I first started trading, I didn't have any savings, so the pressure was on. And when I was one of the original Revco grads, so you started to pay your desk fee of £2,500, pounds a month. So you had to start making money pretty quick, or you just couldn't literally live. So that's a different kind of pressure. And you see it from both sides. I mean, this is something I've kind of experienced. I mean, again, like, not going political, I don't want to go into the generational type things as well. I get a lot of people that don't need to make money but want to trade because in their interest, they have time. And then you have people that need the money and, want to make money, but they have no kind of capital behind them, and they have the pressures of life. And it's really interesting to see that they both generally fail. You need to somehow meet in the middle.
Yeah, I could, when you were talking about both groups there, I can see why both of those could fail.
Mm.
You get the really impatient young guys that are hungry that want to rush
Yeah.
everything, and they fail. And then you get the guys that, like, I one of my best friends is a doctor, but he trades too, and he just kind of does okay because he doesn't
Need the money.
need to do very well. He's rich for he's also a commander up at the Air Force Base.
Oh.
He's got like congratulations on 3 great careers. But yeah, he doesn't really need to make money trading, so it's just something he likes. It's like a gaming time for him. If I make money, fine. If I don't, it was fun.
Well, that's it. It becomes another pastime, doesn't it? Again, I've been, when I've been, introduced to people and people have contacted me, a lot of the time, I just don't have it in me anymore, to kind of say, no, I've heard this conversation before. I know your personality, I know your type of trader. Take up golf. It'll be just as frustrating, but you'll be out, you'll be doing something. Seriously, mate, just take up golf. I don't know how you feel about that, but just my own personal experience. I've been doing it for so long. You meet people, speak to people, and you're like, it ain't gonna work, mate. No.
Isn't it interesting that you can kind of see him coming now?
Yeah.
You know exactly where it's going to go.
Mm.
But yeah, that's so funny because lately I had a feeling about a few traders I've been working with where it was going to go, and after over 10 years of coaching, you see those signs coming.
Patterns. When you're a good trader, patterns. There's a pattern in people.
Yeah. Yep. Man, and something I just pound the table on journaling, and it's kind of hypocritical because when I started trading, the last thing I wanted to do is journal. I just didn't grow up writing in my diary. But a journal is gold after you get 50, 100 trades in there and start really analyzing things. And the more you put into it, the more you can get out of it. What were you feeling during this trade? What were so, but man, it's pulling teeth to get people to journal. They'd rather make more trades in the day and spend less time journaling. And I would rather them do the opposite.
Yeah, I mean, I get the same. People are more than willing to read 50 trading books. Like, wow, that's a great investment. But do you want to do some of the basic trading stuff? It's like, no, I just want to make money now. It's like, okay, you're investing your time in the wrong thing. There's no way. It's like technical analysis, isn't it? You can have as many lines as you want on the charts and everything starts to work and then nothing works. So it's just the same as reading, 50 books. What you can take a little bit out of all of them, but then, how do you process that, put that together? I think that's, really what you said about your course is what you're trying to do is kind of, and like we said, take the learning curve out for people, even knowing they have to go through it anyway, but at least there's some structure to it.
Yeah. And you pointed out something important there. I think the interactive learning experience is so vital. It's one of the reasons I coach. I was lucky enough to have 2 coaches that were just brilliant and actually cared about me. You know how rare that is? I've been around Wall Street and it seems like the finance niche, when you get someone that's really good at what they do, they turn into narcissistic, selfish blanks, and they don't want to help anybody but themselves. So for me to have 2 coaches when I was learning how to trade that were brilliant, I mean, some of the smartest guys I've ever met, and they actually cared, spent time with me. They didn't have to. They were loaded. They were brilliant traders. But, they really cared and they really spent time. And that interactive coaching experience it's the only reason I'm doing this professionally today. And so that's one reason I coach is I feel like I have to. I so easily could have not had that fortune to meet them. And so I think about that all the time. And so I feel like I need to earn that by doing the same for as many others as I can. Sounds cheesy, but I really do feel that pull.
Yeah. Yeah, I mean, it's the way I kind of feel as well. I didn't have mentors, but, you kind of want to feel like you're giving something back. And it's easy to say, isn't it? When you're sat there and
Yeah.
you've done all right.
Yeah.
Genuinely, I think my personality is I just tell people how it is. So if I tell you you're not going to make it, you ain't going to make it. I think, or prove me wrong, but you won't do it with me. So it's kind of that always. When you've done okay in your career, and we all have our ups and downs. But yeah, that kind of, like you say, some people just go completely narcissistic, introvert. Now I want even more, and other people like, well, a bit of that cosmic karma. I don't know, maybe give something back. I don't know. It's
Yeah.
difficult to know in this world, isn't it? Where again, it's I've listened to other kind of traders, and some people just want to say the right things. Do they actually do it? I don't know. It's difficult, isn't it? It's difficult to know who to trust these days.
Yeah. No, and that man, I hopped on Reddit the other day. I don't like going on Reddit because everybody's so cynical on Reddit. You know, everybody thinks you have a hidden agenda or some kind of angle where you're coming at them. I'm really not. I'm just trying to help. But it's sad when the marketplace gets to the point where everybody's on guard and they have their walls up and they don't know what your angle is. And maybe it's just, altruism. Maybe I am trying to do something nice, but I don't know. I like to play the odds. So just in case karma is a thing, I'm never going to regret paying it forward,
Yeah. That's kind of the way I feel at the minute, to be honest. It's better to have quite a few bases covered, isn't it? Because you just don't know, who's watching, who's listening.
Yeah. No, that's exactly right. Plus, this dates back to when I was a fund manager. A lot of my clients were retirees, like I said, and there was so much they didn't know about investing. The lack of information or misinformation was just it gnawed at me, and so I started writing quarterly letters, and not just this is how much is in your account this quarter, but actually trying to have an educational topic or in some instructional piece go with it to try to help them navigate the market. And because man, retired people don't want to look for a new money manager, so it's what they call sticky money, and all you have to do is just relatively well compared to an index, or just not lose a lot more than the index. I mean, how horrible is that? That's all you have to do to keep money, assets under management. My fund was number 2 in the country because I took it seriously, but we had another fund that was he was changing his benchmark every quarter just to look better, just to slap some lipstick on the pig, and the money would stick because when you're 80, the last thing you want to do is go start interviewing money managers. Plus, how do you know they're good? And so yeah, the lack of information is another reason why coaching I want people to learn more to help themselves, because I'm not the type of guy that was going to help somebody else be rich my whole life, unless I was going to be rich too. I work hard, and I always have, but I wasn't built to see someone else's dream come true and not mine.
For sure. I mean, that when you're a trader, you have to make that choice. It's you can work for somebody else, like you say, or you can go out and do it yourself. But if there's no money, you're not making the money. What's the point? And I see so many kind of people that spend years and years and years and years and get nowhere.
Yeah.
And it's tough. It's tough. As I say, there should be more people, kind of out there like yourself, willing to give something for a relatively low price, and the available options to buy them time. Because otherwise, I think AI is just going to take over, and there'll be just a constant churn of new traders. There'll be no experienced traders left. That's the kind of trend I see. Everyone will just move into being managed.
One thing encouraging I saw today is I use AI a lot lately, but not for trading. But today I pitted Gemini against GPT, the latest versions, and I took a snapshot of a chart, both the same chart, and asked them both what I should do. They both said make the same trade, but the stop at the same place, target, almost the same. And neither of them got it right.
So the so frizzy, yeah, then okay.
So I know we're not going to be obsolete, that soon, that quickly, but I just, I think, I'd love to incorporate AI a little more. I'm starting to, that's one thing I'm starting to try to incorporate into our curriculum, is finding tools that might be able to help us be led to those charts we should be looking at first. Because as you know, the quicker we can get our eyes on the right chart, the better. Because there are so many charts, so many time frames to look at. We need something to narrow it down so our focus can be on the right things at the right time.
Well, I mean, I think we could probably talk all night, but this is the problem, isn't it? It's kind of, maybe there needs to be a second part where we just kind of like, just talk about even more crazy stuff, like, Reddit, rabbit holes, all that stuff. But what's the best way for people to get hold of you and, get hold of your products and talk to you, Matt?
My website, my email is just matt@paragoneliteTrading.com. You can always go to the website and get a hold of me through there, paragonfundedtrader.com. And then we have a lot of educational resources in there. I started what's called Paragon Academy. That's within paragonfundedtrader.com. It's a tool. It's an app that I built with an AI that kind of helps people understand how to pass assessments. It's not a full, teaching curriculum. It's, for traders that kind of know what they're doing, but they need to know how to pass an assessment. So it's a, position size calculator and, discipline videos and things like that, and drawdown and, the whole point of this thing is just survival. The prop firms are trying to sift out the people that are unpredictable from the people that have discipline. It's not getting to the profit faster. It's surviving. And so we have a lot of tools in there that'll do that. And we call that the Academy. But and that's free. That's free to go through there. So yeah, we're trying to help people as much as we can. Because what I'd love to see happen is, as you know, to trade and to prop trade, all you need is Wi-Fi. I used to live down in Mexico for a while, really poor place. I lived in Tijuana, Mexico. And when I lived there, people were raised not to have any hope, not to really want things because there's no opportunity. But can you imagine if you introduce prop trading in these places where wealth has never really existed? All of a sudden, you're going to have pockets of wealth all over the world that it really wasn't there before. And how great would that be? Yeah, we're trying to help as many people, because you and I both know, 500 friends that have $500 in a Robinhood account, and they're trying to make it that way, and it just doesn't work out.
Well, Matt, that's been an absolute pleasure. It's been a real pleasure speaking to you today. A lot of insights that I think traders can use. So thanks for everyone for joining us. I'll be back in a few weeks with another interview. And if you like this video, like, subscribe on YouTube and all that good stuff. And I'll speak to you soon.